Something big is quietly happening in the stock market right now, and most everyday investors have absolutely no idea it's even going on. While the whole world is busy watching the obvious AI names, the ones plastered all over the financial news every single day, completely different group of stocks is setting up for what could be one of the most explosive moves we've seen in years. And here's the part that should really get your attention. The window to get in before the crowd figures this out is not wide open. It is closing. So if you've ever found yourself wishing you had bought into a trend just a little bit earlier, before the headlines caught up, this video might be exactly what you've been waiting for. We ran a deep fundamental analysis across hundreds of AI-related stocks. We're talking about a serious, data-driven review that looks at earnings growth, revenue trends, financial strength, Wall Street sentiment, valuation, and a whole lot more. And out of all of that, only 4 stocks rose to the very top of the list, for stocks that the average investor is completely sleeping on right now. By the end of this video, you're going to know exactly what they are, why the data is pointing to serious upside, and what kind of opportunity we're looking at if you move before the crowd does. Now, before we get into the actual stocks, I want to say something to everyone watching right now. If you're the kind of person who's serious about finding real stock opportunities before they become mainstream news, you need to be subscribed to StocksBeat. We put out research-driven content designed specifically to help everyday American investors find the kinds of plays that most people only hear about after they've already moved. So hit that subscribe button right now and tap the notification bell so you never miss a video. And if this kind of content is useful to you, drop a like on this video. It genuinely helps us reach more people who are looking for exactly this kind of information. Now, let's talk about what's actually going on in the market. Because the setup for these 4 stocks doesn't make sense unless you understand the bigger picture first. The AI boom. And I know you've heard that phrase 100 times, but this isn't just hype anymore. This is capital expenditure. This is real money being deployed by some of the largest companies on the planet, building out infrastructure that is going to reshape how entire industries operate. We're talking about data centers. We're talking about training clusters. We're talking about the software and hardware that powers every AI application, from large language models to predictive analytics running inside Fortune 500 companies. The demand side of this story is not slowing down. In fact, if you look at where the spending is going, it is accelerating. And when massive waves of capital start flowing in a particular direction, the companies that sit directly in that path have a tendency to do very, very well for their shareholders. But here's the thing that most beginner investors get wrong. When they approach a theme like AI, they go straight to the most obvious names, the ones everyone already knows. And look, there's nothing wrong with owning well-known companies. But by the time a stock is a household name, a lot of that upside has already been priced in. The ones doing the essential, unglamorous, absolutely irreplaceable work that makes everything else possible. That's exactly where today's 4 stocks live. So let's get into it. And I'm going to pace this out intentionally, because each of these picks deserves a real explanation. You're going to want to stick around for all 4, because honestly, the later picks on this list might be even more compelling than the first one. Let me start with a name that some of you may have heard of, but probably haven't thought about in the context of what's happening right now in the AI hardware race. Stock number 1 is Micron Technology, trading under the ticker symbol MU. Now I want to paint a picture for you, because this is one of those situations where understanding the technology actually changes how you see the investment opportunity. Every single AI chip being built right now, whether it's coming out of NVIDIA or AMD or any of the other major players, requires a very specific type of memory to function. It's called high bandwidth memory, or HBM. Think of it like this. If the AI chip is the engine of a sports car, high bandwidth memory is the fuel system. Without it, that engine doesn't run. You can't separate the two. They are fundamentally connected. And here's where it gets really interesting. Only 3 companies in the entire world have the capability to manufacture this type of memory at scale. 3. That's it. Micron is one of them. Teradata. And this is where the current market environment becomes a major factor. Are both South Korean companies, and right now, with a tariff situation the way it is. Those South Korean competitors are facing import tariffs that make their products significantly more expensive for American buyers. That puts Micron in a position that is genuinely rare in the investing world. They are an American company, making an irreplaceable product at a moment when their primary foreign competitors just got a lot more expensive. The shift toward Micron has already begun, and that kind of momentum has staying power. Now let's layer on the domestic manufacturing story, because this adds another dimension to the Micron investment case that I don't think gets nearly enough attention. Micron is in the process of building a massive semiconductor fabrication facility in New York. We're talking about a $100 billion commitment, and they're also building a DRAM factory in Idaho. These facilities are eligible for substantial tax credits under current legislation. Credits that could translate into tens of billions of dollars in direct financial benefit. That is money that flows back into the company and ultimately benefits shareholders. And again, this is an advantage that a South Korean company simply cannot access. You can't get American manufacturing tax credits if you're not building in America. When you look at the raw numbers, the fundamental picture backs all of this up. Revenue has grown at an eye-popping rate year over year. Earnings per share have exploded by multiples in a short period of time. And Wall Street has taken notice in a big way. The overwhelming majority of analysts covering Micron have strong buy ratings on the stock. And some of the most respected voices in semiconductor analysis see significant upside from current prices over the next 12 months. From a fundamental rating standpoint, Micron ranks at the very top of the semiconductor sector. Not just in the top 10, not just in the top 5, but the #1 ranked stock in the entire group based on a comprehensive, multi-factor analysis. Now, there is a risk here, and I'm always going to be straight with you about risk. Semiconductor stocks are volatile. But here's the thing. The next stock on this list is one that almost nobody in the retail investing community is talking about right now. And in some ways, the setup is even more compelling from a valuation standpoint. So don't go anywhere, because this next one is worth your full attention. Stock number 2 is Teradata Corporation, and it trades under the ticker symbol TDC. This is a company that has been operating in the enterprise data management space for decades. They help massive corporations organize, clean, and move enormous volumes of data across complex systems. It's the kind of work that happens completely behind the scenes. Nobody outside the enterprise tech world is writing magazine articles about it, and because of that, the stock has been largely ignored by retail investors for years. But here's what's changed, and why this old reliable company has suddenly become one of the most interesting AI infrastructure plays in the entire market.